The information displayed in this broadcast is known to cause increased amounts of FOMO. Wells only and his guests are not responsible for any losses you may accrue for having weak hands. Where the haters at? Y'all bitches still ain't showed up. And now, right, we got HEX, flawless uptime. People thought this was a joke. Now they're mad at the chart. It's lullaby music, really, right? This is Wales only. Glad you guys can make it out. I'm making some claims that are pretty outlandish, but I can back them up. Boom. End of story. There is no other crypto out there, so don't get it twisted. If you don't understand where you're parking your money, you're gonna pay the consequences for that, and that's just how the cookie crumbles. Boom. We're obliterating everybody, literally. There is nobody else that comes close to what HEX has done. Boom. Oh, it's about to get funky. Funkier than you could have ever imagined. You know, Richard Hart is a boss. HEX is literally the best thing on the planet. It's simple mathematics. Right? The reality is that I want to be rich as fuck. There's only one way to be rich as fuck. That's by sitting on your ass the longest. Yep. That's it. Yep. That's the secret. The guy well told you. Richard done told you. I done told you. Kareem done told you. Maddie done told you. Everybody done told you. Everybody done told you. Shit, motherfuckers still acting like they don't know. Appreciate that.
Yeah.
I appreciate that.
100% safe. There's plenty of games left.
Valiant done told you. Yo, everybody said it. Man, hey, you know what it is, man? Everybody done told you. Y'all deep. Everybody. My God. HEX agents, bro. Everybody. Australians, man. Everybody gets me. Yo, when is it told you? Dollar told you. Everybody done told you. It's crazy. What up, fam? Hope everybody's having an outstanding Sunday, no matter where you are. Everything is down. But if you're staked, you're up, because that's the point. And today, we're going to basically talk about some basic stuff that clearly a lot of people in crypto just don't know because they're not being taught these things, I guess. But, you know, if you're out here small money, that's okay. Today, we're going to walk through what you should take into consideration because guess what? Small money means you need a lot of time because you don't got the big money. So today we're going to walk through how you should look at your situation and what's realistic in terms of what you could ultimately end up doing, because you have to think about what the process is and why staking is important. Because that's really lost on a lot of people. It's very clear. We have the data to prove it outside of the price action. I mean, we have how many, hold on. We have, just as a quick example to get us started, and then we'll actually get into it. We have 30% of the actual holders that exist in HEX are actual stakers. 30%. 31.5 to be precise. But long story short, people are not using this tool correctly, and this is why they are failing. They didn't learn, didn't do their homework when they first came upon this instrument. Because here's the thing, this is software. Very important that we don't forget that, because the whole purpose of this software is to use it correctly. I mean, we spend our time talking about no financial advice. Well, how about we learn how to use the software first? Because this is software. There's no financial advice required here or to be omitted. Simply detailing what this software is, what it does, and how it's supposed to be used for the optimal outcome to just happen. That's what this is. Now, it just so happens that it happens to bring you USD on the back end because of the math that's tied to this software. Happenstance, go figure. Now, let's say what's up to everybody in the chat. We got like 120 people up in here. Thank you, everybody, for coming on a Sunday. As you guys know, just really trying to help everybody get their head around what's happened, right? Because we talk all the time about staking, why you need to stake, why staking is important. And, you know, it's evident, again, everybody isn't staked, but I think that after this 90+% dip, people are rethinking their attitudes towards staking, because that's the whole point of it. It's to save your hide during a market dump so that you don't do something that you would normally not want to do, like sell at 4 cents after being up at 50. I mean, imagine being that guy. Woo, not me. So what's going on, Hex? Shout out to you. Dougie, what's good, brother? Funny, bro. What's going on, Bufo? Godfather, shout out to you, man. Facing Reality, what's up? Crypto Kane, what's good, brother? Footsteps, what's going on? My homie, what's going on, brother? So yeah, you know, Don Match, what's good, brother? It's important that we just keep focused on what the purpose of this thing that we're doing is, right? And that thing, what's going on, Hex Boy, is to make money, right? What's going on, no name? And there's a process to making money. What's going on, Chris J? Because we're not exchanging time for money here, right? So you got to think about these things a little differently. What's going on, Cryptomania? Because when you're not thinking about things in the correct fashion, you end up making misjudgments. And this is basically why you have people that are not staked. You have people that are exposed. You have people that are not acting in accordance with their best interest because they're not thinking through their actions. And it's important that we think through our actions, especially when it comes to money, because guess what? We are not big bulge bracket Wall Street banks. There are no bailout for us. There's no bailouts here. Nobody's going to say, here's your money back. You guys got to really think about that. Shout out to you guys, Crypto Games Club and Illuminati. Love the name Illuminati. And yeah, this is, you know, people just they don't think, man. Now, everybody is looking for that next big trade, right? Everybody wants 100x, 500x, whatever. But nobody really tries to understand how those trades happen, how those trades are actually made successfully, right? You know, only in crypto does it really happen in such a short time frame. That is not normal, and it's something that you guys in crypto need to understand, because you don't understand why that happens, even though I've explained it again and again. And not, you know, you guys specifically, whoever's listening, just in general, to whoever is out there and this applies to, because it's important. It's really important that people wrap their head around this information. Really, really important, because you don't want to be the guy that sells out at 4 cents. You don't want to be that guy or girl. You don't want to be that person. This is exactly why staking exists in the first place. So you are omitted from that bucket, because if you're not staked, guess what? You're liable to do so. Even though we don't want to, right? I mean, it just happens because we're acting in an emotional, rash manner. And this is what the problem is, right? This is why staking exists. Never mind the yield aspect of it. The yield aspect of it is honestly a bonus. It's an incentive to get you to lock your money up. I mean, you should be thankful that that's the case, because otherwise your best bet would just simply be to throw it in a hardware wallet, and remove yourself from being able to touch it. That's it. Just like the Bitcoin maxis do, right? Like, that's all they have. They don't have anything else. There's no yield component. So you're fortunate to be incentivized to lock your money away. Listen, don't be that person that does not. And yes, Sunday is staking day. Always low fees. I mean, in reality, it's always staking day. The only thing is, is the gas, more than your rent or not. Right? You don't want to be the guy to be giving away too much to the middleman. Because, at the same time, they're not looking out. Man, what's up, Bally Brand, man? Shout out to you, homie. Hope you're doing well, brother. Yeah, I hope everybody watched that Back to Basics. Really, really necessary. This is kind of like a follow-up on that, because we're really going to walk through what you should be thinking, right? Big money, little money, it doesn't really matter. Because if you got big money, you're going to do whatever you want anyway. But this is just what makes sense, because it's a new world and people just don't realize it. You got to stop thinking in dollar terms. Dollars are variable. They're not fixed. Now, what that means is that the value changes over time. It's not one-to-one, right? Just like people say BTC is one BTC, one hex is one hex. Now, the cool thing is that when you're staked, you're getting more hex on top of the hex that you staked. You feel me? So it's a little different than just one hex is one hex. It's one hex is one hex plus some if you got some T-shares. And that's the point of staking, right? This is why you're incentivized to stake. And that's why understanding all these nuances behind making money end up becoming very critical. Because it's easy to think that this is just, get in, ride the wave, get out. And yeah, sure, you could do that. Of course. Plenty of people rode the wave and got out at 50 cents and, good stuff. But what about the ride to 100 or 1,000 or wherever this goes? Because that's my vantage point. I don't have any interest in the short term. And every time I speak, it's in the long term. That's the whole point of staking, is to allow you to be ready, to allow you to give yourself time, to allow you to let the market do what it's supposed to do. I mean, how else do you think you're going to make 1,000,000% gains? I mean, the people that made that first 10,000x were staked the whole time and had to sit through tons of FUD. People getting in now, they're the ones causing the FUD. It's not even external. Completely different scenario. People are FUDding themselves out because they don't do the work. They don't understand how the system works. And you got to learn what's going on, because this is not everything else. This is why people were selling the lows, or selling at all, really, right? Because what's the point of holding dollars if that's your last batch of dollars? You're not going to get anything from that. That's your end point. That's your end game. You're done. So that should let you know that you have to think a little differently. Because what that means is that you're playing with a finite unit of account. You can't generate more dollars unless you're exchanging either units of a sale for whatever item you're selling, or your time for money. Those are the only two options, right? Simply it. So these are the things you got to think about, because you can't just expect to put your money in crypto like it's an ATM machine and think you're going to get 100x out. I mean, we could think that that's what's going to happen and hope that that's what's going to happen, sure. But what if it doesn't? Now, these are the things we got to think about. These are the things we got to be prepared for. Because we do want to ride that 1,000,000% wave, but how do we ride that wave? How do we ride this wave to 6,000,000%, 10, 20,000,000%? How do we do it? That's the question that we're going to answer today, or at least try to answer today. Because I kind of alluded to it in my last stream. I didn't really get into detail, but we're going to just walk through it. How is it that I look at things? What is it that I'm doing? What is it that you could be doing? Because again, it's just about thinking through what you're trying to achieve, because we're all trying to achieve the same thing. Now, the question on top of that becomes is, well, how serious are you in terms of trying to achieve that goal? Right? Because we could provide the solution to your problems all day, but if you don't implement them in a disciplined fashion, then whatever the solution is actually irrelevant, right? And this is why it's important to not just attend these streams, but also try to understand what the information is that's being relayed and why it's being relayed. Very important. Very important. All right. So I feel like we kind of got a good start in here. What's up to everybody? Let's get into it. And the first thing we're going to get into is just thinking, what are the first two things, right? And what I'm going to do is I'm going to pull up a spreadsheet and just kind of walk through what I think of, just as we're trying to do these crazy things that we're doing. Give me a second, guys. Because what we're trying to do is straddle two lines, right? And it's not easy, because how do you get to a point where you're comfortable enough to take risk, right? Because this is what we're doing at the end of the day. If you're not understanding exactly what you're doing, right? Like literally, whereas nobody is educating you and you are just seeking further education. But what that means is that you are exposed to risk in some fashion, right? If you are still seeking information in regards to your investment because you do not know what you need to know, that means you are exposing yourself to risk. That's just how it goes. That's literally the definition of risk. Being exposed to what you don't know, you're exposed to. Okay? So we work for time and we work for income, right? For sales. So you're either selling something or you're exchanging time for money. Those are the two options you got. Now, I don't really use Google Sheets, so give me a second. Just because this was the most generic thing to use. All right. So you're either exchanging time or you are selling. These are the only two things you can exchange for money. You're either selling something. All right. This is horrible. There we go. All right. Two things you can exchange for money, right? Time and selling something. Providing value. That's another way to term that. And full screen. All right, my bad. Is that better? Yeah. Let me know if this is better, guys. And let me know if you need me to zoom in a little bit more. Where's the zoom thing? Long story short, these are the only two things, right? Two things you can exchange for money and time and providing value. That's it. Whatever that thing is, it's up to you. Not my concern, but that's just how it works. So the objective, right, is financial freedom. Right? This is the objective. But there are obstacles to achieving this objective. Right? Now, what are these obstacles? Limited capital, limited time, limited resources in general. Right? We're only one person. We only know who we know. We only know what we know. So these obstacles limit us on our path to actually achieving this. Because to achieve that, the weird thing about it is you actually have to do it backwards. Now, what does that mean? Well, you have to think about where you actually want to end up first. What is financial freedom for you? How are you going to get to where you're going if you don't know where you're going? Right? How are you going to get to, I mean, you need Google, like Google Maps exists for a reason, right? Like navigation, maps, all that stuff exists for a reason. This is no different. You know, a lot of folks enter markets thinking that they're just going to freaking shoot an arrow at a target and that's it. There's a process to this. You only have but so much to work with, especially if you're a wage slave, right? If you're a wage slave, you got to take that into account. If you live on the back of what you kill, you got to take that into account. Everybody doesn't make, $20,000 a sale. These are the kinds of things you have to take into consideration. So we understand the issues now that we all face. These are really the issues we all face, right? If you haven't achieved financial freedom, this is your situation. Period. Nobody's excluded from this. And if you're still working towards financial freedom, you're still working within these risk defining parameters, right? Down here. You either have limited capital, limited time, or limited resources in general to achieve your ultimate goal, which is financial freedom. So then the question becomes, what can we do to put ourselves in a position where we can achieve these so-called goals of financial freedom? Right? That's the question. What are we doing to get there? That's the question. Because that's ultimately what we're trying to do. Crystal clear, I hope. Because this is pretty important. Over time, the objective is to find that financial freedom and escape the rat race. But how do you get there? How do you know that you found that point in time where you can actually leave and move on? How do you get there? You have to actually know where you're going. That's first issue, right? That's the first problem. So you need to have something that I like to call a balance sheet, right? Now, what the hell is a balance sheet? Balance sheet is something that just lets you know what you own and what you owe. That's it. That's really what it is. It tells you your assets and your liabilities. So, what's the importance of this? Well, as a person that's trying to achieve financial freedom, you have to have control of your finances, no? Yes, you must. It's not optional. You can't be out here pissing in the wind thinking that you can rely on crypto to save you when you don't actually know what's going on in the first place. Because that's the whole issue. There's a lot of uneducated people in this space just when it comes to basic financial matters. And then they come in here and then they expect things to just pan out magically without them understanding anything. And that's not how this works. Now, it's cool to understand that this is where to be because that's important. That's number one. But you got to actually get the rest right too. You got to. Not optional. Because if not, you're going to get left behind. Just finding it is step one. You got to make it to the other side. You got to. It's not an option. Otherwise, you're going to get left behind. So you have to be organized. You got to be disciplined. You have to understand what you're doing. And you have to be seeking information. You have to. If you think somebody's just going to put $1 million in your hand and leave it there because you're a good person, you're wrong. That's not the world we live in. Not. So put your proclivities away, whatever personal issues and stigmas you might have about money, put them away. Because otherwise, it doesn't matter what Hex does. Hex could go to $20. You're going to fuck it up. Guaranteed or your money back. Period. Not going to matter what you do or say. Hex is going to do whatever Hex does. Your financial issues are your own to control. Because, again, Hex could be $20. You can cash out 100,000 Hex at $20. That's a ton of money. And you can blow it all in one purchase. Literally. It's 2022. There's tons of things out there that cost $20 million. Why not? But the question isn't even so much that. The question is, well, so what if you're spending the $20 or $20 million? Can you spend the $20 million is the question. For a lot of people, the answer would be no, because people typically overspend what they actually are able to spend. I mean, most people don't even know how much money they have in most cases because they're so busy swiping or just click and buy, right? Just like people that are too busy trading in crypto or just trading in general. They're not paying attention to what they're doing. They're just clicking, clickety click, right? Just like the people that get rugged in crypto. I mean, they don't do any research. They're just getting rugged because that's just what they do. I mean, this is how it happens. Right? This is not rocket science. You can see it everywhere. You know, these are the things that make or break your financial future, right? Your understanding of your situation and how to handle it, how to be disciplined about your finances. Now, I like to think of it as a balance sheet, right? Because your income, I mean, you can have a whole financial statement set up, right, where you got your income statement, your cash flow statement, and your balance sheet. But I just like to think that the balance sheet is really the most important thing because that's really kind of where you list everything. Everything flows into the balance sheet, it turns out. So I want you guys to think about it in terms of crypto equals cash, right? That's really what it is. Crypto equals cash. Because crypto is an asset that's going to get you more cash. Now, cash is really lumped into one thing here, and I'll break it down for you guys as far as how I see it. because this is important, right? Because again, we're trying to figure out how do we get to a point where we have $19 million in our bank account, right? Yeah, it's not complicated, bro. It's not complicated at all. But people have to understand all of these things. And it's not complicated. That's why I'm talking about one thing, and that's just balance sheet, because everything flows into that. Now, this might be a delayed comment because there's a lag, but that's why I'm just going to focus on the balance sheet, because everything falls into that. And everybody should be knowing what's in their bank account and what they owe, especially if they're going to be playing this game and try to be financially free. Because you're not going to be free of anything if you're not organized, because it's going to come and get you one way or the other. So this is just a company's basic financial statement. This is just so you can get an idea of what's typically on a financial statement. This is not, or on a balance sheet, this is not what yours is going to look like by any means. Yours is going to be a little different. But as you can see, in the fiat world, cash and cash equivalents are considered assets, right? Marketable securities, which means stocks or anything you can sell within a short period of time. Asset. Inventories, things you can sell within a relatively short period of time. Inventory. Accounts receivable, money that's due to you. Okay? Clearly going to be an asset. PP&E, things you can sell in a crunch, right? Things that you use to make money, right? Another form of an asset. Goodwill. There's a lot of definitions for this. It's whatever. I'm not going to get into that. Other assets, other things that you can sell for money. Liabilities, accounts payable, money that you owe. Accrued expenses, just expenses that are tallied up over time and you got to pay back. Unearned revenue. Now, this is a liability in this instance because this is revenue that you can't log yet over here as cash or anything, not even as a receivable. Because as you can see, these two numbers are different, right? So this might be work that might be started or not finished or some nonsense like that. But long-term debt, right? Liability for sure. And other long-term liabilities. I'm not going to get into stockholders' equity. That's not really important here for our purposes. Purposes for you to see what an asset is on the fiat legacy side of the world, and what a debt is or a liability is on the legacy side of the world. Now I'm going to show you how I look at things, because it's a new world. I don't live in this world. Most of you do. Even though you think you don't, fact is you do. You do. That's why I'm going through this stream right now. Otherwise, I would not, because I wouldn't have to explain this shit to anybody. Y'all motherfuckers would just understand, but you don't. And that's why we have to walk through this. And hopefully all the people that are here and kind of already know this and are just going to reabsorb this information are going to share it with the plebs that are out there that don't know this and are losing their wigs because they're not here and learning, right? They're the ones that are screaming online, complaining wherever they're complaining at, and not understanding what it takes to get to that $50 level or whatever, right? So when we look at a balance sheet for crypto, it's a little different, right? Cannot be the same. You got your asset side, and then you can have your liability side, right? Now, in my world, it's crypto. That's the asset. There's nothing else as an asset, because a stock is denominated in fiat. And if that stock is not actually worth what that paper claims it to be, that's actually worth zero. So it doesn't even fit in this bucket either. Something like fixed income would fit in this bucket. Preferred stock would fit in this bucket. What's something else? Oh, maybe dividend paying stocks. All right, those will fall into this bucket to a certain extent. Trying to think of what else I can throw in here. Whatever assets that really maintain value versus a dollar, right? Right. So you got crypto, fixed income, preferred stocks, dividend stocks, assets that sustain value versus fiat inflation. And now all of these things above are really that, right? I mean, that's just a phrase for them in a lot of ways. But these are the things you have to take into consideration that are actually considered assets. Okay. Because everything else is just speculation. And when you're speculating, well, it might not work out. So if you're not grasping the difference, bad things happen. Okay. Now, the important thing to realize is why these are assets and why anything that I'm about to put over here is a liability. Because we're used to thinking about things in a certain fashion, not realizing that the way we think about those things are given to us, right? They don't necessarily mean that that's the right way to think about the thing that you're thinking about. Now, that's to say that, as we typically think about stocks as assets, is that really the right way to think about it, right? Is it? When something runs up 1,000% because it's denominated in a bad denominator, right? If a stock is one day $10 and all of a sudden it runs up to 1,000, it does 100x. And let's say it's not the only thing that does the 100x. Is it that the stock is worth that 100x, or is it that the currency collapsed? Because that's the point in time at which we're living at right now. And this is why we're having these conversations about the understanding of an asset, a liability. Very crucial. That's what makes all the difference between your portfolio living through these kinds of cycles and making it to the point where you do see that ridiculous price target. That's how it happens. It happens from you understanding what you're actually owning, right? Because what's happened, and actually this is a great comment because this is exactly what I was about to allude to. What you used to see before is that the economy used to drive the stock market, right? The stock market will go up because things are looking good, blah, blah, blah. And then things will slow down. The stock market would ultimately slow down. But now everything is financialized. Companies buy back their stock. They don't hire. They don't expand for production, right? They don't increase productivity, in short. They buy back stock. They take on debt to buy back stock. That's what companies actually do. And they're predicating those activities on the basis of their stock value, not their balance sheet value, not their book value, stock value. Market cap, perhaps, if you even want to take it there, which is crazy because nobody uses that at all, not for anything. If anything, they use it to just use it as a reference point. It's really not used at all for anything. So once you realize that the market is just hyper financialized to the point that, I mean, you guys got, if maybe you don't remember, maybe you're too young, but 14 years ago, what happened in the global economy? everything pretty much stopped at a standstill because everything was predicated on a farce. Everything. Stock market, real estate market, commodities markets, everything. I mean, just like you're seeing, hold on, wrong. Just like you're seeing crude oil doing triple digits right now. Right? Why is this happening? This is happening 115. How nice. Because we're basically in a recession. That's why this is happening. And these are things, we've been talking about them for a year. If you've been watching me longer than that. But, this is exactly what happened back in 2008. We broke out into a recession and the market took off. Now, the way it happened this time was different because you had a lot of people forcing the market to do this, right? You had Biden come in, shut down the pipelines and all the other things that they've done to tighten production and supplies in the energy market. Now, look at this chart. Where do you think this is going to end up? I mean, this is a much bigger move than the last one. Entirely different. I mean, the last one started at $50, $52. This one started when did Biden get into office? I don't even know, man. If anybody remembers when Biden, let me see. The election happened in 2020, right? So that means 21. So Biden's been in office since basically $51 gas. Okay, that's doable. 13 days, so yeah, $53 gas. Okay, so about the same in terms of a starting point. But the difference here this time around is the U.S. was actually energy independent before this rant begun. And this is why it's a little different, right? Why did this crash happen? I mean, I don't know if you guys remember the crash of energy prices in 2020, but this happened for a reason. This is a case study in what happens when markets get over paperized. That's how much paper supply there was at the time in conjunction with actual supply, right? These are the things that are liable to happen to Bitcoin or any crypto that's ETF'd and papered over in such a way where the math isn't respected, because this is what it always leads to. It never fails, always. And it's like I tell you guys all the time, right? How do you not see these things coming? Well, you do. It's just that people don't want to accept it, because look at how far back this goes back to the top, all the way to 2008. This was a one-way trade the whole time, if you understood the market structure and what was going on, right? And this culminated in the Rona dip, right? But it went back further. This is a function of all the paper in the market. And again, how are we at $115 when everything is papered over? It almost doesn't make sense. It's like, how do we go all the way to -40, but then all of a sudden we're at 115 on the upside? That's 155 delta. That's something to think about, folks. How does that happen? I mean, think about that. Let's look at how long it took that to happen. Let's see here if I can even get this. And I don't know what's up with that music in the background, guys. So I'm sorry if you hear that. 754 days 385%. Now, it doesn't sound like much to us because we're in crypto, but what you don't know if you're not familiar with futures markets is if you got long a futures contract at those prices and you experienced any portion of this move, let's say you got 25% of this move, right? 25% of 155 is what? Because I want you guys to understand how ridiculous this is. 38.75. So let's say you only captured 38 points out of the $155 move that I just alluded to. If you were long just one contract, that means $38,750. Okay? That's what you just pulled off here. If you just peeled off a quarter of this move, that's $38,000, $39,000. Okay? Now, all of that is to say, this is a derivative market. This isn't what happened in our world in real time. When you looked at what was happening in the real world while petroleum went negative, it's like everything stopped. Nothing happened. Right? Like nothing happened. The prices never went negative for us. We never got free petroleum, never got any free energy. We didn't get a credit for the light bill that month. That didn't happen. Right? And most people don't even realize that this happened. But think about it like this. Imagine owning a farm and paying somebody to take your crop and your produce from you. That's basically what was happening during this point in time. Completely illogical. Right? And these are the dangers of derivative markets that the average person isn't going to be familiar with because they're not involved. Why the hell would they know? Makes it, nonsensical to them. But these are the things we got to keep in mind as we move forward into the future, because now we get to determine what the markets are. So that's pretty important. So liabilities, right? Liabilities come in paper form. Liabilities come in the form where they're not backed by anything, right? Because clearly when I'm talking about crypto, I clearly mean Hex, Maxi, and Hedron, things that are mathematically backed, right? Not just somebody pressing brr because they feel like it, right? Fixed income, typically fixed amount of units of paper that companies borrow to pay you back on, and they borrow at a interest rate, and you're expecting to profit from the work of others in this instance. So when they got to pay you, you're a creditor. So it's not like they can just they got to go bankrupt and not pay you. Preferred stock, you're kind of almost in the same bucket, almost the same class as fixed income, because you're kind of a creditor. You're like second in line to them. Dividend stocks, you're behind these guys. You're last in line. You don't really matter. But at least you're getting yield along the way if something crazy does happen. So take that as you will. This is really the weakest form of an asset to me because it's a stock, and stocks really don't matter, believe it or not. In the legal world, they don't mean a damn thing because they if all hell breaks loose, you have no legal claim. You just threw your money away. So that's risk management, folks. That's why I don't like stocks. Sue me. All right. Fiat currency. Now, why fiat currency, right? That's the question. Wells, you're crazy. How can fiat currency be a liability when we need it to live? What the hell is wrong with you? Right? What the hell are you thinking? What's wrong with that guy? Think about it. Think about it. Why is fiat currency a liability and not an asset? Well, the fiat currency itself is just a unit of account. Now, you might say, well, so is crypto. No? Well, yes. But crypto's a little different. Crypto is something you control. Fiat currency, you don't control that. It's something that is out of your control, something that you have no say over what happens in that arena whatsoever. Think about it. Right? Now, in the US and pretty much every Western country that's tied to any central bank, fiat currency is known as a debt. It's a debt instrument. It is not an instrument for your benefit. It's an instrument whereby you actually owe somebody money for using it. Right? Literally. In fact, let me show you guys. U.S. Federal Reserve note versus U.S. dollar. Did I type versus wrong? Sure did. Let's see. Images. Okay, here we go. Here it says Federal Reserve note. You look at your bill in your pocket, you pull it out, it's going to say Federal Reserve note. Just like that. Note means debt. Period. Promissory note. That's what that means in a financial sense. Now let's see if we can find an example of a dollar. Not a note, but a dollar. See, even this was a Federal Reserve note back in the day. $10,000 Federal Reserve note. Oh, nope, this is a YouTube. I'm on pics. What are pics at? Come on. There we go. Silver certificate, true money, $1 silver dollar. And if it was backed by gold, it would say $1 gold dollar. That's what money actually looks like. Here's another example. Silver again. Let me see if we can find another one. One that is gold. Federal Reserve note once again. Federal Reserve note, Federal Reserve. And for those of you that might not know, the current Federal Reserve is the third iteration of a central bank in the United States. Now, you might be asking yourself, how could that be? What do you mean the third? Third what? What? Yeah, it's the third time that a central bank has existed in these lands. Now, why is that? The reason for that is because the people back then knew better. That's simply all it was. And the first time they snuck it in, I can't remember exactly the story anymore. The second time they snuck it in again, but Andrew Jackson batted it down, which is why they want to remove him from the $20 bill. That's what that's about. In case you didn't know, that's why they want to remove him from the $20 bill and put anything else on there. And, that's basically kind of what I want to touch on that. I didn't want to go into all of that. But fiat currency is basically something that you owe to somebody. It is not your unit of account. It is not your money. It is something that if somebody says, I want to print 1 billion of them, they're going to. And that's what you call a rug pull. Right? Literally. That's just the only difference between that and the rug pull that we see in crypto is that in crypto, they literally swap the coins for USD or whatever, anything else. So this is how you need to look at your balance sheet, honestly. right? Now, what other liabilities do you have? Debt, right? Credit card, expenses, right? You got to live. You have to survive, right? You have to survive. You got to live day to day. These are your liabilities, right? Your assets pay for your liabilities. This is how it works. Oops. Your assets pay for your liabilities. You know, in reality, they want to say this, right? But I say this is wrong, right? I say it should be something. Come on, man. Okay, we'll just do it over here. Right? You should be at least that. And if not, and if you're not that and you're this, right, then you got some work to do, right? Because that is clearly being in the red, right? This is being okay, right? And this is being good to go, right? So these are the kinds of things you guys got to think about when you're traversing the world of financial freedom that you're trying to attain. You know, there is no book for this because everybody's situation is going to be different. So this is why understanding these general strategies are key, right? I mean, this is very general. This is not anything. I mean, and I call it balance sheet for crypto. It's really balance sheet for a new world. It's really what it is, right? Because this is the reality right here, right? And we know the best assets are real cryptocurrencies. Okay. So if you have to exchange time or provide value in order to get fiat, right, to get capital to achieve your financial freedom so you can have time or increase your general resources or whatever the permutation is, whatever the mix is of the things you have to do, right? You got to think about what the actual plan of action is, right? How are you going to find that success that you're seeking? Right? You got to, again, find your objective and reverse engineer your way back to it. If you know you got limited capital, well, how the hell do you obtain more capital? Do you got to work more or sell something of value? If you have a job that forces you to have limited time, then you need to find other ways to generate capital that you have that's limited, right? Like these are the kinds of things you got to think about. How can you balance that imbalance that you have? Because we're all trying to find the same things. The question is, how are you going to get there? That's the question, right? And this is very basic. This is just foundational, right? This is how we get to a point where we can say to ourselves, okay, I understand now what it is I have to do moving forward because this is what we need. You know, there should have not been anybody that wasn't staked at all in any sense. Like, sure, not your whole bag if you didn't want to, but you should have had everybody should have some hex staked. Otherwise, not sure what you're doing or what you're thinking because you're not enhancing your assets at all. You looking something like this right now, right? And that's not what you want to look like. You want to at least look like that. And if you got to work and you know fiat currency units do not beget fiat currency units, that means you got to lean on this or that. And you don't want to be leaning on this or that because then you're going to limit your time and your resources and your capital even more, thereby making your objectives further from a reality because your obstacles are becoming greater. And this is why HEX exists in its form. So you can stake it and not have to worry about it. You take the money you got and you stake that money. If it's only good enough for 100 hex, man, you better 5 that damn thing and forget about it, because you can't afford to do nothing else. Be realistic with your situation. Like, these are the hard things you got to really sit here and think about. If you're not satisfied with that answer, then that means you need to do something to enhance what you have that's limited. There is no option there, because these things are an obstacle. This is why staking is critical. It removes the ability for you to wreck yourself. All those people that have been selling Bitcoin below 30K, they're going to regret it. Better believe it. And there's plenty of them, because they think they know what they're doing. And they don't have to actually do anything. That's the funny thing. There's a song for it, folks. There's a song for it for a reason. And there's a reason we start the stream with that song and we end the stream with that song. And we will get there, because that is part of the conversation. Right? Because the thing about that problem, that point right there is that you have to understand that's what you're doing. Right? Because again, the whole thing should be this. We all start with fiat. We all want assets, right? Want assets, right? Because assets beget fiat. Fiat does not beget fiat. Fiat does allow you to acquire assets, right? Credit, a form of fiat, also allows you to acquire assets, right? Credit, debt, same thing, okay? Just in case anybody gets confused. Credit, debt, same thing. Credit card is debt. It's all really the same thing. It's all equivalent, because credit card is debt. But fiat, it's in Spanish, it's fiar, to lend, to trust. Same thing. Not a coincidence. So, yes, it's smart to leverage credit instruments once you understand what you're doing to increase your assets, right? Because the objective should always be to increase your assets, right? Because again, we don't want to be here, right? No. Okay. Great. This is the barometer, right? Right? This is a barometer. You don't want to be in the fuck territory. You want to be at least okay. Right? Because what happens is that you can create this cycle and always end up with more assets at the end of it. This is a cycle right here, right? This is how it starts. 1, 2, 3, 4, 5, 6, 7. This is the cycle, and you want to be able to repeat it as many times as possible. So these are the kinds of things you really got to think about. So I hope that this is making sense, because this should be the objective, right? I mean, moving forward, you guys should understand that fiat is a problem, not a solution. Fiat is a tool that you have to use because of the way the world and society is structured. But we decide what the future is. We decide what that is. So if we begin to understand that we need to be accruing crypto because it's a fiat producing asset, because fiat is variable. That's what you need to be doing, because there's a reason this is called a fixed income. Not variable income, folks. Fixed income. Garten, I see you in the chat, brother. Just give me a few. We talking some advanced stuff right now, so to speak. But we will get to a Q&A portion during this later on. And hopefully I can answer your questions. But this, right? Fixed income, crypto, they're all fixed. These two fixed. Preferred stocks, they're kind of fixed, but people don't treat them that way, but they really are fixed because they have a par value, as it's called. And that par value is called the actual paper value. The like, if you're selling that, somebody's going to pay you that amount in some way, shape, or form, period. Unless you decide to sell it in the open market, and that's on you. If you're selling off market, OTC, something like that, the pricing could be done however you want to do it. But at the end of the day, this has a paper value just like this has a par value, paper value, paper value. Stocks, again, no such thing. This is why it's at the bottom of the list. It's the weakest one. At the end of this, right, you want assets that sustain value versus inflation. All right. This is the key because fiat is variable, meaning it weakens over time. Very rarely is it strong. That's momentary. It's transitory. That's never permanent. This is why stocks always go up over time. Right? If you look at the chart of any decent stock, what's it doing? Up and to the right. Amazon, up and to the right. Google, up and to the right. All them stocks, up and to the right. Up until recently, but you get the point. So fiat currency, what is it doing? It's debasing itself constantly. And we see this anytime we look at any series of economic charts, right? When we look at the Fed, go to one of their data sets, we can just look at consumer price index, right? And we can see that this thing is just straight up and to the right, meaning that is how much more expensive things are for you today versus whenever they started this data point, 1947. I mean, this is insane. And the index, the 100 level for the index here begins in 1984. Okay. 1982 through 84, whatever. That means that if you start during this period and you move back, right, this point, 1947, right, if we look at it at the beginning point in time, it was 60% cheaper, 55% cheaper, whatever. Let me see. 80% cheaper than 1984. That's what that means when it's at 20 versus the 100 starting point. So if 100 is a starting point in 1984 and it's 80% more expensive, or 5 times more expensive than July, a starting point, now we're at greater than 10 times that starting point. Meaning the cost of living over that period in time has gone up to the tune of at least 10x in government data. And we all know that it's greater than that, because that's what's happened really just in the past few years, the past decade perhaps, right? But again, we start with fiat. We want assets. That means we always have to be accruing more fiat in order to get more assets that beget more fiat, because fiat does not beget fiat. Fiat does allow you to acquire assets, and credit, which is a form of fiat, also allows you to acquire more assets, because the whole objective is to end up with more assets. Until you're financially free, this is a cycle you're tied to. And however long that takes, if you're starting with a little bit of money, that's however long it takes. But if you don't start, you're never going to get there. And that was the toughest lesson I had to learn, because you want that money now. You don't want it yesterday. But what you don't realize is when you're not taking the right actions in the course of what you want, nothing works out anyway. Thank you for the super chat, brother. Ah, very nice. Appreciate that, man. Yeah, I did finance too. It was a waste of my time, bro. They don't teach you what you're supposed to know, which is sad. But these are the things we got to think about, right? As we move through this crypto space, because what's happening? You know, the world is really not looking hot, right? The market is really in bear status, even though people don't think it is. It is, and the lines are letting you know so. You know, MACD is letting you know so. You know, momentum is below zero. RSI below the mid band, right? And these are all recipes for lower traction, lower movement. But we'll see what happens, because we haven't really hit an area of support per se. It looks like it, but maybe, maybe not. We'll see. And this is the S&P 500 E-mini futures, which looks just like the regular ES&P or E-mini or the SPX 500. But again, the whole point of this is when you're looking at this chart, right, and you go back, very far. Let me go to 34 days per candle. Log. This goes back to 1872. Now, I want you guys to sit here and look at this and tell me what you notice. This chart only does one thing, and that is go up against what? The dollar. Because that is what it's priced in. Look. Let me find another currency unit. Maybe that'll work. Let's see. Can't even go too far back in Argentina because guess what? Only starts in 1988, this currency. Because for the U versus the US dollar, it's not 1-to-1. And that's why. So there's only but limited data versus the dollar. But as you guys can see, same deal. If we look at it versus some other currency, let's see. Netherlands and Gilda. Same. Up and to the right, even with limited data. Australian dollar. Going back to 92. Same. Barbadian dollar. Going back to 98. Same deal. Oh, wait. United Arab Emirates. Dirham. 91. Same deal. Afghani what? AFN, where you at? Afghani. Boom. German mark. Deutschmark. Oh, sing to me. Going back to 72. So are you guys getting my point? The unit of account versus the asset that you hold is pretty important. And the unit of account can also be a hindrance. And there's your Swiss franc. Same deal. But the US dollar has the longest history pattern because that's just 1-to-1 for us, right? It's never going to really be different than that. But the gist is the same. Now, if you're holding the best asset, which is this software called cryptocurrency, and result is pretty straightforward. Worked before. And again, why did it work? Because it's just software. Can't shut it off. That's why they had to tip it to get it even to do this. But over time, the result is the same, right? Even when you price it in anything else, right? Same deal. And this is why holding the right asset is important. Because again, it's about the balance sheet, balancing act. Start with fiat. You get the right assets, which beget more fiat. Which, I mean, and here's the thing. Why do you want to be able to free your mind of that stress of, oh, I need more fiat? Well, what happens is that you start to think a little differently because you're no longer pressed to make quick decisions, right? And that's what it's about. Being able to make the right decisions. Plain and simple. There's always going to be somebody trying to get in your way, trying to stop you from what you need to do. Right? This is why so many are too busy looking in the mirror instead of looking the way they're supposed to be looking. So if you're looking at something like this, I mean, Bahrainian dollar, right? It always looks the same. What does that tell you? I mean, we could pick any currency on here. It's going to be the same thing, Greek Dharma. So you got to pick the right asset, long story short. And this one naturally gives you more of that asset. And is this the whole chart? Nah, it's not. This is just V2. Swap. Because again, software. That's what it's all about. Once you can wrap your head around understanding this is software, your point of view changes a little bit and you relax a lot more. Because what you're not doing is you're not sweating something that you don't need to sweat. Right? Because there is no quarterly anything. There is no management. There is none of that. This is just a crypto. And that is it. No more, no less. And that's important to understand. Because that makes all the difference between being the person that sold like a pleb down here and thought that they did something versus a person that's still holding it up here and understands that there's nothing else to do but just hold it up here. Because guess what? Wash, rinse, repeat. Because a dollar is variable. However, one BTC is one BTC. One hex is one hex. However, you get paid more hex for staking hex. So you're best served by using the software correctly. And that's how you ultimately beget more assets over liabilities over time. And you start to think differently because you're not pressed. You're letting the market do the work. You're letting the software do the work. And you're just doing what you need to do to get to the point where you don't have to worry about this. And you're just worried about this. And maybe even that at some point in the future to get you to this. Because that is what this is all about. This is how you plan to win. This is it. This is the formula. That's it. Notice, this could be anything. This isn't even hex specific. This is just what it is. You bust your butt, you grind, and you make it happen. And you got to start somewhere. If you starting with $20 and save them 20 until they're 1,000, it happens quicker than you think. But you got to start somewhere. And you have to understand your mix, your asset liability mix. This is critical. Because if you're accumulating the wrong thing, the world is going to make you pay for that. this is the point in time where opportunity reigns supreme. Not a lot of opportunities to buy dips like this before. So a 95% dip, 90% dip, whatever it was, I think it was 92. Let's see. Oh yeah, 92%. From the highs off of 10,000x to 1,000x, and you're not buying? Better go watch that first video, because you slacking. All right, now we can do a Q&A, because that's pretty much it. You know, this is how you're not panicking at the next down cycle, because you're understanding what the plan of action is. Whether there's a depression or not, you're not worried about it. You already are working towards your goals of getting it right. Because sure, you can use Fiat, you can use gains from your crypto. I'm not saying not to use gains from your crypto, right? This topic is about what you should be thinking until you find your financial freedom. This is what this is about. What should you be thinking about in your journey to financial freedom? And as you guys saw, these are things you can look up. Assets, liabilities, what these words means. You can look these up. But long story short, things you want to own versus things you don't really want to own, but you got to use. That's it. This is how it works. So if you guys got questions, let me know. If not, we'll wrap this bad boy up. Yeah, I know, right? Me too. Let's see. Will EHEX, PHEX hit parity, or will EHEX get left in the dust? Well, if you don't know who Richard Hart is, I suggest you get familiar, because there will be parity. There will be parity. He's even said so much. So yeah, it's gonna be parity. So get your questions, guys. If not, I'm gonna wrap it up. I know it was Gartner, I think it was the name, had some staking questions earlier. Here we go. How do I figure out how much X staked amount will be worth at Y time? You can't. You can't determine how much anything is going to be worth in the future. As I just detailed, you just know it's going to be worth more than it is now, because a dollar only goes in one direction over time. So you're best served to understand the system first, figure out what it is you actually want in terms of time, because Hex is not like Bitcoin. It's a little different. And the reason it's different is because it actually works. There are no admin keys. There will be no modulation to it in the future. It is what it will always be. So it is a legit store of value premised on that. Right? Like gold is always gold. Gold never changes. And just like gold has never changed throughout history, Hex is never going to change either. Now, the difference here is that this is code, this is software, and this is currently the best form of storing value that we know of, because it's portable, it's divisible, it's a unit of account, and you actually get more from it. So it's a store of value. So that would be your answer. Let's see. Let's do the little thing here. Let's see what it would be. We're looking at 512x if the math stays true on the next ramp higher. So let me process this properly. So that would be 500. Yeah, this is probably good. 700 days or so. 504. No, way gone. 512. Yeah, that's good enough. Man, $20. Not bad. Yeah, you really gotta know what you're out here buying, man. This is why I try to explain people what cryptocurrency is. Software. If you're not buying software, you're buying something where a middleman is controlling that. That is not software. Thank you, No Hope Pope. Appreciate that, bro. Let's see. In my opinion, is HEX going to be more decoupled and decorrelated from the market over time with adoption, or you reckon the opposite will happen? Over time, HEX is going to do what HEX does, which is stay decorrelated, and that's because it's not tied to the rest of the market. It doesn't work like the rest of the market. It's not intertwined into the system like the rest of the market. Is completely decentralized. It's like 98% decentralized, meaning that 98% of the supply that you can attack in terms of buying or selling is on a DEX. Only like 2 to 3% of it is on an exchange, and I had to audit that myself. Cheers to you, Archie. Yeah, no doubt, right? 1 cent. I think you mean Pulse. Oh, you mean Hex to the downside? Well, look, bro, it'd be nice. I wouldn't be mad. All right, so the system is designed to just mint 3.69% inflation annually. That's it. Now, how it works is that this is software. So there has to be a capacity limit, meaning more than one person can use it. So this is why the APY is greater than 3.69, because there's not that many people staked in the system. Only like 9.3%. No. Yeah, 9.34%. And that's why the APY ends up being double digits. If it was 100% staked, then it would be 3.69. But because it's around 10, that's why it's around 36.9%. Hope that makes sense. Don't know anything about it, so cannot comment. Sorry. Let's see. No, because it's software. Can't regulate software that you can't touch. So, nope. Etherscan, baby. Etherscan.io with your address, and have fun looking through your transactions. Let's see. What is the best asset? HEX. Everything else is predicated on that. Don't get it twisted. Thank you for the super chat, Jesse James. Appreciate you, man. Thank you. Let's see. Whoops. Oh, Hedron is a good one. I'm eventually going to do maybe a video or a stream on that because nobody understands it. So I guess I'll release some alpha at some point in the future about that. I don't know. It's a good question. Depends if you understand what you're doing when you're LPing, right? Because what you're doing when you're LPing is that you're providing the market inventory. So what that means is you better not want them coins after you put them up. I don't think a lot of people get that because you're risking those coins. And you don't know what the market is going to do, whether it's going to rip or dip or whatever. And if it does a move like this, like let's say you're talking about Hex Maxi, and that is the legit pair, right? Matter of fact, let's go to DEX Screener. And let's just talk this out. Because so many people are going to get wrecked. This is going to be sad. Let's see. All right. What are we talking about? Hex Maxi, right? All right. So you write a Hex Maxi on the screen. It's Maxi Hex. Meaning if you buy Maxi against Hex, you're buying Maxi and you're selling Hex. So in the example you gave is the opposite. So long story short, if the pair you take into account is what you want to look at, that would be the inverse. Let me see if I can make this damn thing even invert. Thank God. All right. This is the pair you put up on the screen. So this is Hex Maxi. Okay. So if you were providing, if you were LPing and this happened, all your Maxi would basically be gone. Pro rata, of course. You would have a whole lot more Hex, but your Maxi would be disappearing because it's 75% greater in value versus Hex. So the market is basically demanding that from you. So that's what you need to understand. Not so much the pair in regards to what you're going to earn, because I don't think that's what you really care about. Most people think so, but I think you got to understand first and foremost that when you're putting your coins on the line, you can lose them. And what you're giving up might not be replaceable by those fees that you think you're earning. Yep, this is a good way of looking at it. If you want T-shares now, let's see. Your pleasure, A3. Your pleasure, brother. Well, it's been ongoing since last year. I mean, just nobody really cared to pay attention. So when could it end? This time around? Probably to the end of this year. Probably 18 months should be good enough. We'll see. Let's see. Where do you see the T-shirt rate going for Hex on Potion compared to Hex on ETH? So, all right. You got to go watch the Back to Basics so you can understand why this isn't really a question that people need to be asking, because it's going to be the same. And the reason it's going to be the same is because the T-shirt rate moves predicated on the end stakes, not on the stakes that are being made. So if the ROI isn't greater, then it doesn't actually even matter. It's not gonna mean anything. So it should be the same. My strategy on when Pulse Chain launches, no idea. Depends on what I see. What I do is I work out a bunch of scenarios predicated on what I think I might want to do based on what I actually think I'm going to have on that day. And that's all anybody can do. Anybody laying out strategies on things that don't exist, good luck to you, because you better have a backup. Video on LPN, maybe not a video, probably a live stream on it so people can understand what it is, because I don't really think people do. Yeah, I think we'll see Bitcoin at 15K. As a matter of fact, I think this chart is probably a better look at that. Oh, I deleted my damn. Here we go. Yep. So I'm thinking either that or 15K. That's what I'm thinking. So yeah. Yeah, I kind of talked about LP in a little bit, I guess. You're right. Let's see. Thank you, brother. So I guess I answered your question. Yeah, that's right. You got it. You know. I don't need to do a class for you, my man. You understand full and well the risk you take when you do LP. Because if you are not focused on those fees, you are going to be upset. What's going on, Accidente? And what's going on, X-Betty? Hope y'all homies is having a good Sunday. All right, let's see. I don't know. I honestly think it could happen any day. Personally speaking. Let's see. Can I pull up? I don't know if I know the Pulse Chain GitLab Shit. I don't even know if this is the right one. This can't be the right one. Yeah, this can't be the right one. I'll have to like look up the information in 2 weeks ago. Boom, there we go. So they're still getting shit done, as you guys can see. I think I found it. No, this ain't it. I don't think I could actually snatch that up. So sorry, but I think this is it because this looks like it to me. Official implementation of Pulse Chain Node, a fork of Go dash Ethereum a week ago when Richard tweeted. Like I've talked about this before. I mean, he pretty much let us know the shit's already ready to go. Everybody just don't fucking pay attention. So there you go. Okay. It depends where you live for MCA. So go to the website, Mountain Crypto Advisors with an ERS.com at the end and sign up because we are going to be doing a special session, onboarding session or a period of onboarding for offshore personnel based on where they reside. So we will need to know where you live so we can contact you so we can actually get the process initiated. In that regard, on behalf, in regards to the Hex Investment Trust, if you are an accredited investor, then just go to HEX.investmenttrust.com. I'll put the link in the chat before we go. And just fill out the questionnaire, and the fund admin will review your case and say no, yay or nay. Because again, it's all predicated on where you live and what your government allows you to invest in. It's not really up to any particular investment product itself. It's actually predicated on your government and what they allow you to invest in. So there is the answer to that question. Okay. To restake, you just do what you did the first time. But check out Hodl Dog's video, Hodl Dog's channel. He has a ton of how-to videos on staking and restaking and stuff like that. So check out my man Hodl Dog. He got all those great videos for that. Probably could. Who knows? You're welcome. Now, the interesting thing is, if you think about it, it could spark a new bull market because it's going to be a copy to all people that have a wallet on Ethereum. That's almost 2 million wallets. Free money. They might not touch that. They might liquidate. Who knows? Hard to say. Yeah, I guess this was it. Is this not it? Is this not the right one? Yeah, this got to be the right one. No faucet here. Yeah, I hope so, man. I wouldn't be mad. That's for sure. Sideways action in a stabilized market is key. Remember already saying you will always be left with a greater sum of the lesser value coin when LP when extreme volatility. That's right. Now it's just what I said, just in fancier way, right? Because this is just saying the lesser value coin is the one that nobody wanted. It's the one everybody was selling. So yeah, not the one you want. Yeah, this is from Mount Crypto Advisors, the link, and that is a link for HEX.INVESTMENTTRUST.com. Team Alpha, I don't really promote that. That's more for people that are like ready for that kind of stuff. And that's just for people that are trying to learn about stuff that I don't really talk about anymore because people don't really understand it. So, like advanced financial market related topics and stuff I don't talk about in regards to Hex and crypto because nobody really pays attention to it anyway. So stuff like that. You got to really be interested. So it's not really anything I promote. So let's see. Any other questions, guys? If not, we can wrap it up. Let's see. Oh, this is a good one. A year ago, we were of the opinion that organic growth was best for Hex. How are we doing now with PLS and PLSX to make the rest of crypto world go in the same direction? So interestingly enough, I think that what we saw over the last year was organic growth. And I think that what happened was that the announcement of Pulse Chain brought a lot of people to the table that wouldn't have come here otherwise. Because guess what? They're the ones that have been selling the hell out of unstaked Hex. Not people that are staked. So something to think about. Now, after so many people getting the floor wiped with them for not being staked, I'm pretty sure they learned their lesson this time around. And that's what it's about, right? This is how I learned my lesson. This is how we all learn if we're not going to learn by listening. And that's just how the cookie crumbles. So yeah, man. Hope that answers your question. PLS is going to change the direction of what's currently going on. It's going to expose a lot of frauds. It's going to get a lot of people wrecked. And those of you that know what the solution to becoming super wealthy is, good job. If you don't, there's a song for it, and I'm about to play it. So, yeah. If you're new to Hex, definitely watch the stream I did previous to this one. It's a good one. Peace. Right? The reality is that I want to be rich as fuck. There's only one way to be rich as fuck. That's by sitting on your ass the longest. Yep. That's it. Yep. That's the secret. The God well told you. Richard done told you. I done told you. Kareem done told you. Maddie done told you. Everybody done told you. Everybody done told you. Shit, motherfuckers still acting like they don't know. Appreciate that.
Yeah.
I appreciate that.
100% safe. There's plenty of games left.
Valiant done told you. Yo, everybody said it. I mean, hey, you know what it is, man? Everybody done told you. Y'all deep. Everybody. My God. Ex-Asians, bro. Everybody. Australians, man. Everybody gets me. Yo, Wendy's done told you. Dollar Club done told you. Everybody done told you. It's crazy.